Remember, management is making their own assertions. Like we have this amount of cash, everything. Because for the assertion, it has to come from the management themselves. So that's why, for us to validate or verify those assertions, we need evidence, right? So that is just an example of the legal evidence and audit evidence. Remember, for legal evidence, we will be looking the so-called preponderance of evidence, no? Meaning kadaghanon. Mm. In our case, for audit, it's just reasonable. And you have the following assertions used by the auditor. Of course, it's like assertions about classes of transactions and events and related disclosures for the period under audit. So, example of that, one assertion is occurrence. Transactions and events that have been recorded or disclosed by the management have occurred, and such transactions and events pertain to the entity. I-move. So, you know the sources, right? Next. Recently, we are now into the use of automated tools and techniques, or the CATs, okay? So you have, no? Remember, management is responsible for the fair presentation of financial statements so that they reflect the nature of operations of the company based on the applicable financial reporting framework. In our case, that's IAS or the IFRS or PFRS. GAAP is for the United States. One, you have assertions about classes of transactions and events for the period under audit. There are three activities that you need to remember, no? Or you need to practice in the future. So you have assertions about classes of transactions and events, then assertions about account balances, and assertions about presentation and disclosure. So under assertions about classes of transactions, you have the following examples given. You have occurrence, completeness, what else? Accuracy, cut-off, classification, presentation. An example of the presentation is that transaction and events are appropriately aggregated or disaggregated and clearly described, and related disclosures are relevant and understandable in the context of the requirements of the applicable financial reporting framework. Go back again. So that is for the classes of transactions. Now you have also the assertions about account balances and related disclosures at the period end. Number one, existence. So what does it mean? It's not fictitious, no? The assets, liabilities, and equity interest reported on the financial statements actually exist. It's not purely or merely on records. What about rights and obligations? Hmm? Meaning, yeah, that's those assets or whatever, no? If liabilities are really obligations of the entity, or those assets are really owned
gain benefit.
And the entity has the control over those assets. Then completeness.
All assets,
Assets,
Nothing
liabilities,
is
equity, interest.
Committee.
Walay omissions.
There should be no omission. Meaning, all assets, liability, and equity interest that should have been recorded
Or fair
have been recorded, and all related disclosures that should have been included in the financial statements have been included, have been disclosed. What about accuracy, valuation, and allocations?
appropriate debt and related disclosures.
Hmm? What did it say?
Appropriate and
Equity interest have been included in the
It means the assets, liabilities, and equity interest have been included in the financial statements at appropriate amounts, and any resulting valuation or allocation adjustments have been appropriately recorded, and related disclosures have been appropriately measured and described. So, the valuation have been appropriately recorded, and its related disclosures have been appropriately measured and described. From appropriate recording to appropriate measurement and description. How about classification?
assets, liabilities, and equity interest have been recorded in the proper accounts.
Just like your assets, you're classifying it according to current, non-current, no? Liabilities, current, and current. Then the presentation.
Assets, liabilities, and equity interest are
appropriate
appropriate
and aggregate and disaggregated, clearly described, and related disclosures are relevant and understandable in the context of the requirements in applicable financial reporting framework.
Right. So they are appropriately classified as to its particular, just like cash, no? It's like inventories, receivables, okay? And of course, the reader will be able to understand your presentation. Take note, class, that any item that cannot be presented on the face amount of the balance sheet, because you cannot list there as you wish. It's like if you have 20 cash accounts, you mean you are going to list all those 20 cash accounts there? Like cash in bank, Rural Bank of San Juan, cash in bank, Rural Bank of Hinandoyan, cash in bank, Cooperative Bank, cash in bank, Slim, cash in bank, Metro Bank, Land Bank. Do you have to write that on?
Sir, pero bawal ko na.
It's not. But sometimes you'll be using aesthetic also in the presentation of
Para
the financial reports.
para uniformity ko.
Uniformity is one.
Understandability.
That's why, to make it more understandable, you have to provide a notes to financial statements. You have to disclose it. It's like your receivables of 1 million. Do you think you are going to place on
From
the balance sheet all the debtors?
Company A, company B.
Yeah. What will happen to you?
Kami sa asa.
Sumukan
Malagyan pa naman.
To your
Ito nung po.
balance sheet?
Di kita hiway ko sa nila sa one record. Tapos mga ba tayo?
Right.
Abang nag-init.
That's why we have to disclose it, no? After all, sometimes they are going to present accounts receivable, then in parentheses,
Notes
net.
one.
Net, meaning it is already deducted with the allowance for doubtful accounts. And then another parenthesis again, open and close the note. No? Note number 7, note number 8. So you have the following audit procedures for gathering evidence. One is inquiry. This is the most common one, class, just like what you're doing, diba? Sometimes you are too nosy what is happening in your organization, GPA, GPMA, okay? Because under inquiry, you are seeking both financial and non-financial. You're also asking questions. No? What's the performance of the company in the past 2 years, no? Or last year, especially last year is the date, no? Or the coverage of your audit, no? The previous year. Next is observation. What are we doing in this aspect, class? Oh, you're going to?
Performance. Search of performance and company and
Progressing or
You're going to do some
Research.
visit, no? Or attend inventory count, what else?
personnel.
Yeah, the personnel. Whether that personnel assigned in that particular division is really there. That's one. Because that's also part of control. Yeah. Inspection also. That will encompass examining records, documents,
Reviewing sales orders.
the tangible assets.
Shipping documents, statements, customer return.
Then you have recalculation,
Consists of checking the arithmetic
just only what? Checking the
arithmetical accuracy.
mathematical accuracy of the amounts.
Journals, subsidiary.
The performance,
Independent execution of procedures of controls of the original body. Using automated tools and techniques to check controls recorded in a database.
just like you are already given the aging schedule of the accounts receivable, you can reperform it, no? Recalculate it. Not only recalculation, but you need to reperform. How? How are we going to do the reperformance here? No, we are going to trace back from the origins of the transaction. We reperform. You know, just like recording of the transaction is a performance. Posting to ledger is a performance. Then we have to work back. Next, we do confirmation. That's pretty common, no? We already discussed that or briefly. I shared it to you during your intermediate accounting class. So, just like the cash in bank, we need to confirm really
Bank statement.
there is that cash that exists in the bank, correct? Oh, that's why we need to send a letter. That letter, a confirmation letter, that is signed by the entity. But as stipulated in the in that letter, the confirmation should be sent directly to the auditor, not anymore to the entity. And then we do analytical procedures. Oh, that is the next chapter we're going to discuss. So what else?
Audit procedures.
Those are the different examples. Next. Inquiry, the basics. Okay,
Do's
continue.
and don'ts na.
Continue.
Mamanigkuhan sa kanong observation.
Vouching and tracing. Oh. So you have the accounts receivable confirmation. Okay. First, you as an auditor decides to take a random sample of customer. Remember, class, if the company has 2,000 customers, do you think
Tagsa ulit mo.
Kaya sir, kung di ra isa ka auditor ang kayo, balay 100.
no, it's not. It's not our job because we'll be sending confirmation letters.
Ba, hindi ka na.
What? You have to confirm all the 2,000. First, you need to determine the amounts. No?
Kung material board.
If the amount is
If the price
that
is
material or not, and then you also have to determine whether the account has been their existence for
More than 1 year.
120 days or almost 1 year. Until that time, probably you decide to make a sampling of how many sorry debtors you're going to send with confirmation statement. Next. So you have two types of confirmation, the positive and the negative. Differences. Under positive,
Respond
Agreement
directly
nila
to the
sir.
audit.
Agreed sila.
Positive.
At diri auditor ra.
well, the confirming party will respond directly
The
to
auditor.
the auditor, indicating whether they're going to agree or disagree.
And diri disagree ra sa negative confirmation.
What about negative?
Directly to the auditor ang the confirming party disagree.
Oh, the confirming party will only communicate with the auditor to the auditor if they disagree.
No positive.
What about no positive confirmation or request no confirmation?
Case. Ah. Hindi mo why response. Pwede day na di sila ma-respond. Kuya mo si.
If I were the director, why should I? Especially if I already paid my account. And then I wondered why my name or is still listed in the company's balance.
Basta guro po din naman kasi.
Yeah, that's also possible.
Hindi naman tayo nagkuhan 2 years ago.
Remember, the advantage of this is that is considered a highly persuasive evidence. However, it is costly and time-consuming and an inconvenience to those asked to supply them. Just like you, if you were asked to supply an information, do you think you will answer that easily?
Affected na.
And then,
Madali ka. Hindi mo maka-open for 20 minutes.
What else?
Sufficient.
Well,
According to Isa,
let's go back to chapter 1, chapter 2, chapter 3. Our objective really is to design and perform audit procedures in such a way as to enable us to obtain sufficient appropriate audit evidence. That is PSA 500.
sufficiency is
So there's an example in the text provided pertaining to Parmalat. No? Next, sufficiency, that is the measure of the quantity of persuasiveness of audit evidence. More or less both qualitative and sometimes quantitative. No? How persuasive the evidence that you have gathered in connection with your audit. What about appropriateness?
Measure of the quality of audit evidence, that is, its relevance and reliability, providing support for the conclusion on which the auditor's opinion is based.
But under sufficiency, unlike legal evidence, audit evidence does not have to be conclusive to be useful. Remember, we're only looking for reasonable. As long as those evidences satisfy us, then we'll use those evidence. Yeah. Compared to the evidence
conclusive.
being asked by the court, no?
Hindi ka pwede marunong.
And then the appropriateness, that is simply the measure of the quality of audit evidence. Meaning, those evidences are relevant and reliable to support for the conclusions that we're going to develop when we are going to issue, before issuing an auditor's opinion. Correct? Chrisabel? Monica? Hmm. For income statements, evidence is more persuasive if it is a sample from the entire period, meaning the entire year, not only a month, no, or a quarter, because that's income statement. We are looking for the true profit or the correct profit. And note also that we'll be using our own judgment as to what constitutes sufficient appropriate audit evidence. So those are the factors, no? Or attributes. So you have accuracy, completeness, authenticity, risk of bias. Talking about reliability class, that is affected by the accuracy, completeness, authenticity, how authentic, how genuine the data
and the
are,
risk of management of auditors.
and the risk of both, no, biases
And the
by either by the management or the auditor.
Kasi hindi na dato sa akin.
Mm.
20% yun.
Remember that when you are using information produced by the entity, you must evaluate
Whether the information
whether the information is sufficiently reliable
for the
for your purposes, including obtaining audit evidence about the accuracy and completeness of the information and evaluating whether the information is sufficiently precise and detailed for your purpose.
The auditor's judgment.
But of course, our judgment still prevails as to what constitutes sufficient appropriate audit evidence, because we are influenced by the following: the significance of the potential misstatement, and that's the one we are going to avoid; the effectiveness of management's responses, evidences gathered during previous audits, persuasiveness of the audit evidence, and your full understanding of the entity's and its environment, including, of course, the internal control. So just like we're given the least and most reliable audit evidence. Okay? So you have least reliable, most reliable. When you say least reliable, it means that is the source. Yeah, di kasaligan, because we're not certain. You are not certain yet. After all, it's coming from the management because the management has to protect their image. So that's internal inside the entity. Then you have external from outside entity. The source, person, might be an employee or auditor, then employee of the company or external auditor. Then you also have the third person. So you have the least reliable and most reliable examples. When you are looking for the source relative to entity, the less reliable is from information or the information gathered inside the entity. Well, most reliable, of course, is evidences you gathered from different persons, from different entities also. When we're talking about source, the person or the employee or auditor, if that is less reliable, of course, is the employee. Most reliable, there's no question about it, unless if the external auditor is considered biased, no? So when you are going to source out information from any person or employee in the company, so that is considered least reliable, although they can still be utilized, no, as one of your evidences. But considered most reliable is confirmation from the third party, just like the bank. Bank is a third party. Or just like confirmation of the debtors or confirmation of the vendors, because in accounts payable, we also send confirmation. And then regarding the source, independence of provider. So anyone or any entity associated with the company that is considered least reliable, but entities that are not associated with the company are considered most reliable. When you are looking for qualification of provider,
Little knowledge.
so little knowledge of subject is considered least reliable. But if you are
An expert.
Consulting an expert.
consulting an expert, then that is considered most reliable. What about operations of internal controls?
Those not in operation.
The moment you determine or you have sensed that the internal control of the company is not well organized or not well implemented, not well practiced, that's already counted as least reliable. Versus effective implementation of internal controls. What about the audit or auditor evidence gathering bias? So what is bias?
Unfair judgment.
Hmm?
Ay, tinala.
Nakaiingon.
Imo nang ipakuan mo na kanina sa facts. Ibis ka sa imo.
So you are being partial, no? And your mentality, your mindset could no longer be changed or could no longer be altered. So, fixated, no?
Dili ka open.
You're not open.
Close-minded.
Yeah, close-minded.
Open-minded ka.
What else? Audit evidence obtained directly by the auditor. Of course, that should be reliable because you are the one who gathered all those evidences. And it is more reliable when it is being documented or exists in documentary form, whether paper, electronic, or other medium. Again, it is more reliable when it is obtained from independent sources outside the entity. The effectiveness of the client's internal control structure has a significant impact on reliability of evidence. So we need to review really the original document class rather than relying on photocopies or facsimiles. So that's all about audit evidences.